Hello, fellow traders. 'Tis I, the Rumpled One. January 19th, the year 2018. It's Friday. That means it's time for the weekly wrap-up. Let's see what's happened this week. Of course, hopefully this week you paid attention to the money and risk management. Well, as we can see, the euro had a nice weekly moved a few hundred pips, I do believe. Let's see, we had a low 121.64, high 123.22. Excuse me. That's well over 100 pips. I guess if we really wanted to figure it out, we could, let's see, just draw that line to there. Oh, 156 pips or so. And once again, all the gaps filled. So anybody who played the gap fill, you basically just raked your pips in. Looking at the daily, we see what's happening here right now. You see where price is sitting compared to yesterday's candle. Only a 64 pip range today. The beast at 123. Looks like a lot of prices are right around the daily open there. Let's go back a chart. Let's see, weekly open. There's a -1, a -6. So there's a few right around the weekly open. Buy zone trades, as you can see, you got a trigger. Couple times for profit, another trigger, nice profit there. No short triggers on the buy zone on the daily open. And you can see the weekly opens down there. Oh yeah, I know. Rat trade. Nice red rat reversal there. Looking for a green here. Okay, open, pivot, has not filled the pivot, missed pivot. So we might have a missed pivot that'll have to get filled sometime in the future. Price action. Once again, simple stuff. Nothing complicated. 1, 2, 3, 4, 5 in a row. And then we had a little turnaround. 5 red H1s in a row, looking for that buzzard reversal. And looking at the 5 lines from yesterday, let's see where, that's 05, 02. Okay, there's the start. You can see here, trading at the line in the direction of the H1 candle. Sometimes it yields a big profit, sometimes it doesn't. Just a small one. You have to know, you have to be able to take your pips. I mean, if you look right there, if you got in at 36, that was a 5 pip trade. You can see price starts to reverse up through this area here. All these wicks, it's going. Just take the money off the table, because obviously it's not pushing down. But you never know. And that's why it's trading. right here, the wick zone. Once again, price doesn't like to stay in the wick zone. It came in, it came out this side, came back in, came out, came in, came out, went out the other side. It's in there. Price does not like staying in the wick zone. Yesterday's, the daily wick zone, doesn't like staying in there. The holo made a highest open, made a high right there. It fell down. We got a lowest open. That happened right there. Probably the beginning of the day. Let's see, what's that time? Well, no, 2. That was the 2 o'clock candle. Lowest open. And you can see here what happened. Once again, simple method, simple system. All you have to do is execute. And the squigglies, I just don't know. I guess maybe if you took the cross there, you made some money. But I mean, one of the things I don't like about squigglies is, at different levels, at different times, it's telling you to do different things. There's no consistency. And that's what you want to strive for as a trader, is consistency. And then yesterday, I don't remember if I was answering that continuation question. Somebody asked me about how do you stay in a continuation trade. Well, I did a little ran the price analyzer, so we're analyzing what happens when price goes through the previous high. So here we're looking at the weekly chart, and it opened less than the previous high 93 times out of the last 100 bars. The current high was greater than the previous high 47 times, and out of those 47 times, the close was greater than the previous 32 times, or 68%. Okay, because 32, 47, 68%. So you can see, if you take that break, when price hits that previous high on the weekly, you've got a nice chance of winning. Now, how many pips you going to make? Well, let me do this before I forget. This is the price travel analyzer, but this is the frequency distribution for higher highs, lower lows. So we're just looking at the higher highs, okay? And what we are doing is we're seeing, how many pips could you take? Well, there was 47 high breaks, so now you had 6 in the range of 10 to 19, 2 in the range of 20 to 29, 4 30 to 39, 3 40 to 49, and you can read the rest. I don't need to read for you, right? So what does that tell you? Probably make 10 pips, right? So if you get in at that break, and then you set your TP at 10, and there was 47 of them, that would have been 470 pips over the last 100 weeks. Now, 100 weeks, that's almost 2 years. So that doesn't really sound like much, does it? I mean, you have to decide. But it's one of those things where if you don't want to sit in front of the screen all the time, there's a high probability trade for you to take. And there's other trades you can take too, but that's just one. Now, and that's just off of one pair. Because, obviously, out of those 100 weeks, there was 53 that didn't break the high. Well, maybe it broke the low, and you can do the analyzation that way. And you can trade more than one pair this way. But the thing about the continuation is, if it's hitting that, breaks that high, you might want to stay in that trade for a while. Now, of course, we can drop down to daily, and we can see what happens there. And the dots, the red dot is the previous week's high, and the blue dot's the previous week's low. And right there, you got an inside bar, so you don't have a trigger, you don't have a high break there, but you do have a low break on the daily. So once again, you can see here that there are some profitable trades. I mean, there's a few less than 10 pips on the daily break, but you can see here there's a lot more 10 pips or more. And we see that because basically this high break is exiting the, where is it? It's the daily wick zone right there. So we can see here, if we do this, that was what? Oh, about 30 pips. Not bad. Simple trade. So, I don't know what else to tell you guys. I mean, it's simple. I didn't say it's easy. I just said it was simple. Now, for those of you who want to know, over at Crestlick.com, there's a problem. The security certificate expired, and now I guess something changed in the Google Cloud, and it's not accepting the SQL. That's all programmer talk. Bottom line is they're trying to get it fixed. I'm not sure if they're going to move this, start using AWS for servers or sticking with the Google Cloud. But that's the problem. So in the meantime, you can just tune into the videos here. And I guess somewhere down here you subscribe, and somewhere down there you click on the bell, so you'll get the alerts every time I post a new video. But that's about it. I mean, really, it's this stuff. It's very repetitive. It could even be boring, but see, if you're bored, then that's good trading. I mean, somebody could go, you know what, I've been looking at your videos, and it's the same thing over and over, show me something new. Well, right there's the problem. If you're looking for something new, you're looking for the wrong thing. Trading isn't about finding something new, it's about finding something that works, and you stick with it till it stops working. I mean, it's that simple. I've said it before. You are a monkey. You follow what you've been taught, and if you do it properly, you'll get the banana. You click the mouse, then you click the mouse again, and you get the banana. I mean, that's all we are. I have to laugh because it's true. I mean, if you think about it, you are reacting. You're not, when you're trading, you shouldn't be analyzing all this stuff. You don't do this while you're trading. You do it before you're trading, so when you see price hit that line, you click, and when price goes up to 20 pips or so, 30 pips, and it starts coming back, maybe you click at 25, maybe you click out at 20, maybe you take half off. It doesn't matter, but you click that second time and you get your banana. So and if you don't, then you get a loss. That's the equivalent of an electric shock. So it's just that simple. It doesn't matter which one of the methods I showed you, because as I say over and over again, it's not what you trade, it's how you trade it. TheRumpledOne signing off from a week of draining the banks.